In today's video, I am going to be sharing with you a simple trading strategy using supply and demand zone. I'm going to make this video tutorial very simple so that even a layman will understand everything in this video. Some traders make trading difficult. Why? That is why they share you complicated trading strategy. But in today's video, I'm going to break down the supply and demand zone. I'm going to break down the strategy very well. I'm going to use a simple trading formula to narrate and explain how the supply and demand zone works. Most of you know about support and resistance. Support and resistance is related to supply and demand zone, but they have their own similarity. So in today's video, we are going to look into supply and demand zone, how to identify them, and how important this zone are to traders. So my advice to you guys is to watch this video from the beginning to the end. Don't skip any. Make sure you watch the video from the beginning to the end so that you understand what the video is talking about. I still remain my humble self, Austin Ikeru, and you all are welcome to my channel, Ostino FS. Now, when we talk about supply and demand zone, supply and demand zone is an area, a price zone where buyers and sellers are looking at. It is otherwise known as an area of value, right? So supply and demand zone are what actually moves the market, right? So every market, whether forex, crypto, commodities, are moved by supply and demand. So that is why I said supply and demand zone are very important in price action. So it is important to know that supply and demand zone is an area on a price chart where buyers and sellers are looking at. It is an area of value where buyers and sellers are looking at. So I'm going to share with you my screen so that you will understand what this supply and demand zone is talking about, right? So if you look clearly on this chart, right, so this is what we call supply and demand, right? So at the upstream is the supply zone, while the down is the demand zone. So a level where price could not break any further is known as what? A supply and demand zone, because there is a supply and demand zone in that area. Supply and demand zone are areas on a price chart where buyers and sellers are looking at. So supply and demand are areas on a price chart, right? They are not an exact line. They are areas on a price chart where buyers and sellers are looking at. So in other words, you call it an area of value. So it also states here that it is an area on a price chart where the price movement of a currency pair is likely to experience a change in direction due to an imbalance between the buyers and the sellers. So in this process, there is going to be a movement in the market, right? And what causes a movement? What causes a movement is supply and demand, right? So it says imbalance. Imbalance means when there is a consolidation, an equilibrium where buyers and sellers are exchanging prices. So that was what mean an imbalance. So at the time, either the sellers or the buyers will push the price up or down. So that's what we have what we call an imbalance. So these zones pop up on the chart when there is a significant increase in buying or selling pressure. When the price of a financial asset approaches this level again, traders often look for trading opportunity based on the expectation that the price will either reverse or continue in the same direction, right? So when the price breaks out from this consolidation, right, when the price breaks out from this consolidation, buyers and sellers are looking at that area for price to retest, for price to come back and retest it, because that is the place where institutional traders like banks, government are looking at. So that is the area of value that we are talking about. So when we talk of supply and demand zone, there are few things that come into mind, and that is drop based rally. That is when price goes down, consolidate, and then goes up. We have what we call the drop based rally. We also have the rally based drop. So the rally based drop is when price goes up, consolidates, and then goes down. Then we also have the drop based drop. The drop based drop is when price goes down, consolidate, and continue going down. Then we also have rally based rally. So rally based rally is when price goes up, consolidate, and then continue going up. So let me give you example so that you understand what I am talking about. So this is what we call rally based rally, right? So if you watch clearly on this chart, right, if you watch clearly on this chart, you will see that the price was formerly in an uptrend, right? That is what we call rally. The price was going up. Then when the price got to this level, it started to consolidate. That is when we have what we call the base, right? So after the consolidation, what happened? The price broke above this resistance level and then went up. That is what we mean by rally, right? So once you open your price chart and you see that the price is in an uptrend, right? The price now makes an uptrend move and then start to range in an uptrend, right? So in this process, both the buyers and the sellers are in equilibrium. The buyers buy from support while the sellers sell from resistance, right? So when the price now breaks above this consolidation, right, then when the price breaks above it, what happens is that the institutional traders, the big banks, the hedge funds, the government, they have stepped into the market, right? So they have placed an order, a pending order. In other words, we call it order blocks. So they place a pending order in these zones, right? In this zone. That is why as the price was consolidating and as they are placing that pending order, the price now moved sharply, right? So that is why we have this rally. The price now moves sharply, right? As the price moves sharply, there is still a pending order remaining here, right? So what you do is, once you notice this type of chart, you know that the big banks, the smart money have entered the market. So you simply place a pending buy order at this zone where their pending order is. So what happens is that price will now make a retracement to that zone to trigger their remaining order, and after that the price now went up. So that's what we have, the rally based rally. So this is what we mean by the rally based rally. So the second one we have here is known as the rally based drop. So the rally based drop is when the price is in an uptrend, right, and then got to this level and start to range, right? Now at this process, the price is in equilibrium, that is consolidating, and when the price breaks below the support level, it means the sellers have stepped in. So at this point, the big banks have placed a pending sell order here, right? A pending sell order here. That is why you saw the sharp movement of the price. So what you have to do is you use a rectangle line, right, to connect the highs and the lows of the range and extend it right. So you are now waiting for a price to make a retracement to this supply zone for you to place your sell trade. So you can clearly see that after the price breaks below the support level, what happens is that the price makes a retracement to the supply zone and then continue going down. The reason is because the smart money, the big banks, has pending orders which has not been triggered. So when the price break below the support level, the price came back to trigger their pending order. So if you are smart enough, you'll be able to place a pending sell order at the same level where this smart money people are placing their trade. So this is what we mean by the rally based rally. So another one we have here is known as the drop based rally. So the next one we have here is known as the drop based rally, right? So the drop based rally here means that the market was formerly in a downtrend, right? So you can see the move from here. The market was formerly in a downtrend. Then when the market got to here, start to consolidate. That's when we have the base. So baseline means consolidating, while drop means downtrend. So the market was in a downtrend before, then suddenly the market started to consolidate, start to range. That's what we have base. So the market now start ranging where buyers and sellers are exchanging price. They are in equilibrium. So the buyers buy at support, the sellers sell at resistance, right? So when the market now breaks above this resistance level in a sharp movement, right? When you see a sharp movement, a long green candle, right, breaking above this resistance level, you simply know that the smart money, the big banks have entered the market, right? So what you simply do is you use what we call a rectangle line and connect the highs and the lows, and then you will do what? You extend it to your right. So what you are doing now, you're waiting for price to come back to retest the demand zone, right? Because when the price was consolidating, the big banks, the smart money, are placing pending buy orders, right? So in the process of placing their pending buy orders, the price now moves sharply and breaks above this resistance level. Meanwhile, their pending order is still intact. Some were triggered while some were not triggered. So the price will now make a retracement to come and trigger the remaining pending order. So what you simply do is, once you see this type of chart, you simply place a pending order at this demand zone, right? And then wait for the price to make a retracement and trigger your entry. So that is why we call this one the drop based rally. So the drop based rally is from a downtrend to an uptrend. When the price makes a down move, consolidate, and then went up, we have the drop based rally, right? So let me give you another example for you to understand what I'm talking about. So this one is what we call the drop based drop, right? So this is clearly a down movement. When the price is clearly in a downtrend, right, it tends to make a range in a downtrend, right? So this is clearly a downtrend. That is what have the drop. The market is going down, dropping, and then the market got to this point and start to make a range where we have the base. So the market start making a range, right? So the buyers and the sellers started to exchange price. The buyers buy at support, the sellers sell at resistance, right? So what happened is the smart money, the big banks will now step into the market again and then start placing pending orders. We call it the order blocks, right? They start placing pending order. So once the pending order becomes too much, the price will now move sharply, right, and breaks below the support level, right? So for the fact that their pending orders were not triggered, some were triggered but some were not triggered. So not all of their pending order were triggered, some were triggered. That was why the price breaks below the support level in a sharp movement. So the remaining one that was not triggered, price will come back again, retracement to that supply zone to take their entry. So in that process, you are expected to place a pending sell order at that zone. So once you identify this type of chart, what you do is you use a rectangle line to connect the highs and the lows and extend it to the right. So when the price breaks below the support level, it will definitely comes back to retest the supply zone. So in that process, the price will trigger your entry and you'll be able to join the big bands and trade in that direction. So this is what is known as the drop based drop. That is from a downtrend to a downtrend. So the price was going down, makes a consolidation and then continue going down. We call it the drop based drop. So now let me give you an example on a live chart so that you understand what I'm talking about. Now just look clearly on this chart, right? Look clearly on this chart. You can clearly see that the price was formerly in an uptrend. That is how we have rally. So this is what we call the rally based drop. Rally based drop. So if you watch clearly, you will see that the price was formerly in an uptrend, right? That is what known by the rally. The price was in an uptrend. Then when the price got to this point, it started to consolidate, right? The price began to consolidate where the buyers and the sellers are exchanging price. So the sellers sell at the resistance level while the buyers buy at the support level, right? So the price was consolidating here. And was the process, this was the period where the smart money, the big banks, the hedge funds, step in, right, and they started placing pending sell order. So when their pending sell order becomes too much, the price now breaks below the support level. That is why I have this big red candlestick. That's why I have this big red candlestick, right? So once you see this type of move, this sharp movement, you know that the big banks have stepped in, right? So what you do is you simply use a rectangle line to connect the highs and the lows of the range, right? Use a rectangle line to connect the highs and the lows of the range, and you simply extend it to the right. So what you are doing now is you are waiting for the price to make a retracement to come back to test the zone, the supply zone, because this is a zone where smart money people, the big banks, those people that have big money are placing orders in a large quantity. So for the fact that they have placed so many orders, the price now move sharply and breaks below the support level. So for the fact that their orders are still remaining, the orders that they placed are still remaining, some were triggered while some were not. So the price will now make a retracement back to this zone to trigger the remaining pending order. So that is why once you see this type of chart, you simply place a pending sell order at the exact point where these big banks, these smart money people are placing their sell trade, so that when the price now makes a retracement back to the zone, it will trigger your entry and you will be able to ride a massive trend. So let me give you another example so that you understand what I am talking about. So look at this one very well. This is what we call the drop based rally, right? From a downtrend to an uptrend. So formerly the price was in a downtrend, right? That's what we have what we call a drop. The price was formerly in a downtrend. That's what we have what we call a drop, right? So when the price now got to this level, it starts to do what? Consolidate. That's what have the base. So the base is known as consolidation when the price is ranging. So when the price is ranging, what you do is you simply wash the price action, right? So at this point, the smart money, the big banks now start placing pending buy order at this zone, at this demand zone. They start placing pending buy orders at this demand zone. So when the order becomes too much, it now makes the price to break above this resistance level in a sharp movement. That is why we have this long green candle. So this long green candle is big banks, smart money. This is a sign of big banks, smart money entering the market. So once you see a sharp movement, a clean sharp movement from this consolidation, from this baseline, you know that the big banks have entered the market. So for the fact that they are placing trade in a large quantity, the market could not wait for them to complete placing their pending orders, right? So that is why the price now moves up sharply and breaks above this resistance level. So what you have to do is, once you see this type of movement, you simply use a rectangle line to connect the highs and the lows and extend it to your right. So what you are doing now is you are now waiting for the price to make a retracement to this demand zone, right? Because you know fully well that the big banks, the smart money, their pending orders were not triggered. All were not triggered. Some were triggered, but not all were triggered. So they still have some pending orders at this demand zone. So you are not placing your pending buy order so that in case the price makes a retracement to this zone, it will trigger your order and you'll be able to ride the trend. You will not be able to trade alongside with these smart money people. So what you simply do is, once you see this type of chart, you use a rectangle line to connect the highs and the lows. You extend it to your right, and then you start waiting for the price action. So once the price now makes a retracement back to this zone, you simply place a buy trade, and then your stop loss should be below this support level, right? Or if you are a busy type of person, you are always busy, you can simply place a pending order, a pending buy order at this zone, and your stop loss should be below this support level, so that if the price makes a retracement back to this zone, it will trigger your entry and you'll be able to ride this trend alongside with this smart money concept. So this is how the demand and supply zone works. So now if you watch clearly on this chart, right, this is what I mean by supply and demand, right? So this up is what we call the supply zone, while this down is what we call the demand zone. So if you watch, you see that the price went up, which is rally, and then formed this small base, right? The price went up, then started to range, right? Then after ranging for some time. The price now went down, right? You see this long red candle telling you that the smart money have entered the market because they place trade in a large quantity. So for the fact that they place trade in a large quantity, the market could not wait for all their pending orders to be triggered, and so that is why we have this sharp movement. You see this long red candle, right? We have this sharp movement. So once you see this type of chart, you know fully well that this is clearly a supply zone, right? This is clearly a supply zone where price could not be able to break above. So you simply do what? Use a horizontal line to connect the highs and the lows of the range. So once you connect the highs and the lows of the range, you now extend it to the right. So after doing that, what you do right now is to exercise patience and wait for the price to make a retracement back to this zone, right? Because the price is coming back to retest the remaining orders that these big banks left behind. So in the process of triggering the remaining orders of these big banks, the price will automatically trigger your entry, and that is how you'll be able to ride this massive trend, right? So when the price now got to this point again, right, the price now got to this point again and formed a new demand zone. So this is what we call a demand zone, right? So the price fell down from the supply zone, came here and formed a new demand zone. So this is how you trade the demand and supply zone. I hope you understood this video very well. If you like this video, give us a thumbs up. Don't forget to subscribe to this channel for more educative content like this, and also don't forget to turn on the notification icon to be notified whenever I publish new content. I will see you again in my next update. Bye.